We have now come to the second last paper for today, Utilizing Renminbi Trade Financing, Sime Darby Experience. For this, our next speaker is the Vice President of Global Supply Chain, Sime Darby Holdings Berhad, where his leading role is in developing the trade of sustainable palm oil globally. He has over 20 years' experience in the palm oil industry, which includes managing the oil palm plantation, strategy and corporate planning, and heading the trading team in Global Trading and Marketing Department of Sime Darby. Without further ado, ladies and gentlemen, Mr. Michael Song.
Thank you very much, captains and fellow members of the palm oil industry, distinguished guests, ladies and gentlemen. As with the other Malaysian exporters, Sime Darby was also approached by Bank Negara on the possibilities to discuss on the possibilities of using Renminbi trade settlement. Given that global palm oil is priced and is quoted in US dollar, moving away from this currency may not be a straightforward thing. There were a lot of considerations that need to be made by both buyer, especially by the buyer. But in the case of the seller, we needed to know that the renminbi proceed can be hedged in Malaysia. On the buyer side, there were much more considerations that they need to make before agreeing to invoice the renminbi currency. I will later elaborate on this. After entering into a series of discussions with a few parties, we are pleased to have been able to invoice some of our trades in renminbi. In the whole process, we have some valuable experience and insights which I will share with you today. Before I proceed, allow me to provide some brief facts about our trades to China. Sime Darby have been actively selling palm oil to China since 2008. The usual commodity products sold are refined palm products, namely the RBD palm olein and RBD stearin. And due to the reason mentioned earlier, trades have all along been invoiced in US dollar. The usual shipment size that we perform is above 10,000 metric tons per shipment, of which we normally sell on a single buyer basis. If we were to put some value to this shipment, say olein price at $600 per ton, the value of this 10,000 metric ton would be about $6 million. Given such value per shipment, most of our customers seek trade financing to finance their purchase. The preferred option for financing is usually the user's letter of credit, with user's period of up to 6 months. Bank borrowings may not be a likely option due to certain difficulties in obtaining bank loans in China. So before deciding on using renminbi trade settlement, our buyers have the following considerations. First and foremost is the cost of trade financing, or the LC discounting rate. This is the buyer's main concern, and in fact, this perhaps is the largest determining factor in choosing settlement currency. As most buyers seek trade financing for their purchase, hence cost of financing is a very important factor in deciding which currency to use. Next, buyers also take into consideration the US dollar renminbi conversion rate. In addition to that, their perception or view on how the dollar and renminbi will perform is also another factor. All these three variables are key and have direct impact to their bottom line. With the buyer's key considerations clearly outlined, I shall explain their challenges using the renminbi. This is our observation. Firstly, cost of trade financing, which is the main consideration for any buyer in deciding which currency to use. If you were to compare the LC discounting rate for renminbi and US dollar, you'll find that the discounting rate for the dollar has all the while been cheaper. This has also been mentioned by Mr. Hao a while ago. Discounting rate for renminbi is higher due to the higher cost of fund. Incidentally, renminbi cost of fund is about 4 times higher than the dollar. With cost being an important consideration, buyers will always seek the lowest cost option, which is using the dollar financing. Therefore, choosing renminbi trade settlement becomes a big challenge. When price of the product is converted and quoted in renminbi by seller, the buyer will evaluate the exchange or conversion rate used to convert the cargo price from US dollar to renminbi. This is to ensure that the rate that they receive is competitive. There are times when this deemed exchange rate applied as not competitive to them. Next, perception of US dollar renminbi performance for forward months. Not until recently, renminbi has been strengthening against the dollar. Buyers who do not perform 100% currency hedge generally prefer to settle a future payment in a currency viewed to be weakening. And this is the case of the dollar. However, this only applies to certain segment of buyers who take a view of the currency. In summary, in order for buyers to be convinced to use renminbi, we have observed that their main concern, which is the high cost of renminbi financing, has to be addressed. With the buyer's concern in mind, we then approached banks in Malaysia, who then provided us with certain structures to address the customer's concern of high renminbi cost of financing. And one of the solutions proposed, as illustrated here, is called the FX Embedded Letter of Credit. This structure involves a slight enhancement to the process of the normal user's LC payment. In this structure, although sales is contracted in US dollar, buyer issues renminbi user's LC and eventually pays in renminbi. Based on an agreed US dollar renminbi conversion rate that they get from the bank, the receivables are then financed in US dollar to leverage on the lower dollar cost of fund, thereby keeping the cost low for the buyer. What we see here is this solution will manage to allay the fears of our customers against the high cost of funds of the renminbi. In essence, the benefits of this structure are buyer settles the invoice in renminbi but enjoys dollar discounting rate, hence addresses buyer's concern of high renminbi cost of financing. Using the renminbi settlement option will also allow buyer to opt for an extended period of financing. This is because the LC issuing banks in China issue dollar LC to a maximum of 90 days. We have not seen any LC in US dollar which goes beyond 90 days. And this is viewed as one of the factors that can boost the use of renminbi. The structure which is illustrated here is just one of the many available solutions. There are different solution options that can be customized to suit customers' appetite on Forex exposure. Just to share with you, Sime Darby adopted one of these structures and have since successfully invoiced some trades in renminbi. Ladies and gentlemen, China remains a very important buyer of Malaysian palm oil. In our opinion, using renminbi trade financing can potentially increase sales of palm oil to China. This is possible because of the benefits that it brings to the buyers. Firstly, Invoicing in renminbi would lower transaction costs for our buyers, as they can save on currency conversion costs since the use of renminbi provides a natural hedge for the buyers. The lower transaction costs to the buyer directly translate into an increased competitiveness of the seller. Next, by using renminbi trade financing, buyer can enjoy the extended period of financing. This is the one that is going beyond 90 days. And following that, renminbi credit lines are easier to get access to in China. These are but some of the benefits that is listed. With further support from the respective regulatory bodies of both countries, we are confident that there will be greater benefits using renminbi trade settlement moving forward. Ladies and gentlemen, to further enhance renminbi trade financing, we propose that Bank Negara and the People's Bank of China to have a bilateral agreement for palm oil commodity to address the high interest rates on offshore renminbi borrowing. The high interest rate of renminbi borrowing has always been the bane of the entire process of using renminbi. With such arrangement, it will provide a more sustainable solution and, more importantly, provide an added advantage to Malaysian palm oil exporters and further increase the competitiveness of Malaysian palm oil to China. With this, thank you very much for your attention.